In the late 2000s, the United States experienced one of the worst economic crises in its history, the housing market collapse. While the effects were felt nationwide, some regions were hit harder than others. One of those regions was the West Coast, where a perfect storm of economic factors led to a devastating collapse. In this video, we'll explore the causes and consequences of the housing market collapse on the West Coast. In the early 2000s, the West Coast experienced a housing boom, with property values skyrocketing and home ownership becoming increasingly popular. However, this boom was fueled by an unsustainable combination of loose lending standards, subprime mortgages, and speculation. Banks were eager to lend money to people with poor credit scores and minimal income documentation, resulting in a flood of subprime loans that were packaged and sold as mortgage-backed securities. As the housing market grew more and more inflated, banks and other financial institutions became increasingly reckless in their lending practices, assuming that the housing bubble would never burst. But in 2007, the bubble finally burst, and the consequences were dire. Home prices plummeted, and homeowners who had taken out subprime mortgages found themselves unable to make their payments. Foreclosures became widespread, and banks found themselves in possession of a huge number of properties they couldn't sell. The impact of the housing market collapse on the West Coast was particularly devastating for low-income communities and people of color, who were disproportionately affected by the subprime lending practices. Many lost their homes, and those who managed to hold on saw their property values plummet, leaving them with little equity and few options for refinancing or selling. The collapse of the housing market had ripple effects throughout the West Coast's economy. The construction industry, which had been booming during the housing bubble, saw a sharp decline in demand, leading to widespread layoffs and business closures. The human toll of the housing market collapse was immense. Many people lost their homes, their jobs, and their savings. The West Coast saw a surge in homelessness, and food banks and other assistance programs were overwhelmed with demand. In the wake of the housing market collapse, there was a growing movement for housing justice and affordable housing. Activists and community groups pushed for policies that would prevent another housing bubble and ensure that everyone had access to safe and affordable housing, according to the Wall Street Journal. The West Coast has already seen as much as a 10% drop in some areas. Many people are still struggling to make ends meet, and the specter of another housing bubble looms on the horizon. Could the ripple effects of the West Coast housing market be the final catalyst to the housing market crash?